What is going on, everybody? Hope you guys are having the best of your entire life. So today I made about $10,500 in just probably hour and a half of market open. So 9:30 to 11 o'clock, I think that was it. Now, yes, this was not one of those days that I risked a lot of money. My risk was not heavy. The trades were very heavy. Like SPY trade went like I think 180% or 200% something. QQQ's trade went 250 plus percent while I was in the play. But I'm gonna give you the real source today, right? I want you to go out there, make some money. And if you do not know me, if you're your first time watching my videos, my name is Sumesh. I've been day trading for fucking god, too long now, 5-6 years now. And my whole goal of this channel is to literally help you educate, learn a little bit about trading, so you can go out there and make some money and get to give your family the life that they deserve. I'm literally doing it like I'm at 10.5 grand. It's check the time out. It's 3 o'clock in the morning nearly. I'm recording this video. I have a flight early morning tomorrow, and that's why I look so run down, because I was getting a lot of stuff done. Because I'm going on a holiday, and you know what holidays are. A couple of days before that, you're like so stressed out about the stuff that you're gonna leave behind when you have a businesses. Oh man, like look at me. I look tired. But I was like, oh, but I'm sure there's some stuff that you can learn from this. So let me, you know what? Let me suck it up. Let me just record a video. So if the video, the quality of the video will be good because the information will be good. But make sure you let me know in the comments down below at the end of the video if you do enjoy it. And also subscribe to the channel. And welcome, and let's go over the trades that I took. All right, so I took 3 trades, but the 2 trades were the massive trades. So we'll just talk about SPY and QQQ trades. AMD trade was like 20% trade. I mean, 20% still good, but compared to SPY and QQQs, 20% is nothing. So let's break this down, all right? Now, the first things first, on SPY, there was one thing that I noticed, all right? I'll break it down first things, which is my time frames. All right. So if you understand my time frames, you'll be able to understand my trading style a little bit better, right? So time frames that I like to trade is very simple, right? 9:30 Eastern time to 10 o'clock Eastern time, the market open, I watch 2-minute chart. Why? Because there's not enough data available for the trades to set up fully yet. So I'm watching 2 minutes because it kind of gives me enough data, because every candlestick's just 2 minutes. Then 10 a.m. to 11 a.m. I watch 5-minute chart, 5-minute chart only. Okay. And then 11 a.m. to 3 p.m. I'm watching 10-minute chart, right? Because there's too many candles otherwise. So I like to make it smaller, like, you know, the chart a little bit more compact. And then 3 p.m. to 4 p.m. the market shuts. I am never trading. I'm hardly ever trading. Around the last 1 hour, I don't want to trade. Nah, that's just not me, right? I don't like to trade last 1 hour because I feel like that's the smart money hour. So I don't want to trade. I make enough money here. I'm happy to leave 1 hour for the smart individuals that are out there, if that makes sense. You see? And yeah, I just realized that the date here says 30th of May. I don't know, it's the old note that I just started using again, but that's not important. All right, so this is date from 31st of May 31st, because it's 2-3 a.m. where I am right now because I'm traveling. Oh, I live in Australia as well. So yeah, that makes sense. All right, let's go with this trade. So basically that means this trade was taken around this before 10 o'clock. And before 10 o'clock, what stock I'm trading, what time frame? It's 2-minute time frame, right? So now let's go with this. What happened on SPY today was we gapped, like literally, we not gapped up, but we closed around this 522 area. We were like, you know, trying to push towards the upside, whatever. I started watching this roughly towards this area when we were trying. I'm like, oh, this looks good for the upside. This was the original plan in my brain. I'm like, oh, this looks good for the upside, because I was, you know, up until here, this was looking good for the upside. I'm like, oh, there's decent trend, the volume's decent, you know, it looks good for the upside. And then this happened. One big red candle happened. Now you gotta understand this. If the trend is strong enough, right? If the trend is strong enough, the sellers will not be able to take over. Like buyers are pushing the price up, and they're pushing the price up like this. If the trend is strong, they won't be able to just push the price down like this. So when this happened, and I was like, man, I don't want to take a trade towards the upside. I call these candles trend killer candles, right? So if you see a big drop or big push up, if the stock's pushing towards the downside, a big push up, one big candle, These candles are called trend killer candles. They just kill the vibe, if that makes sense, right? They just kill the vibe. It's just not fun to trade after that, right? Anyway, so this was a trend killer candle, sweet. And the volume was a little bit more than the green candles as well, the previous green candle. So the volume's a lot. That clearly defines trend killer candle. And then I'm like, okay, sweet. There's still no play setting up towards the downside, so I'm chill. And then this happened. Then I saw this huge red candle. Now this white line on my charts is the VWAP, and this is the settings that I have on my VWAP. So you can pause the video and have the settings like this, right? You just add, literally go here, type VWAP, add VWAP, change the settings to these settings, all right, and you'll be good. Now, this is a VWAP. VWAP basically means the whole concept behind VWAP is it's a volume weighted average price. So based on the volume of the stock at that given time, when you give weight to the volume, that price should be the average price of the stock. Like, this is like a smart money concept, and you don't need to dig too deep into it. I'll break it down in some other video, but just understand VWAP is a smart money. Like, they use this VWAPs, all right? Now, price broke below VWAP, and one very simple rule that a lot of traders use and you need to know is, if this is the stock, if this is the VWAP, if the stock is trading above the VWAP, all right, they say, again, this is not my rules, this is what I learned, or this is what I know from the market. If it's trading above the VWAP, it's buyers have are in control. If it's trading below, bears are in control. That's all you need to know. Sweet. Now, I'm like, okay, whichever in control, I want to catch a move towards it. Like, this one looks like, okay, it closed below the VWAP, so bears are in control, and it looks good towards the downside. The volume's so much more compared to all these green candles. I'm like, sweet. But I'm a sort of trader, I do not like to jump into the trade. I cannot jump into trade when the stock has already made a decent move. Like, the stock went from 524.8 down to literally 523.5. That's a $1.30 move. Already made a decent move. I'm just like, okay, let's see if we get a little pullback, right? That's sort of trader I am. Like, I want to see, and especially this 524 is a critical level marked on my charts as well. So I want to see if we can go back and kind of, try to retest this 524 at least, right? So 524 started retesting. I'm like, sweet, this looks all right. This looks good. You see what I'm saying? Went, retested this. And also, another concept, which is why I took this trade, was a thing called confluence. So what's confluence? Confluence means when there's more than one reason for you to jump into a trade. Like in this particular trade, as you can see, there was VWAP sitting right at the top, right? So there's VWAP sitting right at the top. This is the price. There's 524 level sitting right at the top. There's ATMA running right here as well. And also, it happened when the volume's like fully confirming the move. You see what I'm saying? The volume's fully confirming the move here. Does it make sense? So I was like, all right, this looks good. Let me trade towards the downside, right? And this is exactly where I went short. I went short. My goal was like, okay, if it hits the low of the day, because I didn't know that it gonna make such a huge move down. I was like, if it makes low of the day, I'm happy. So as soon as the price started going, it hit the low of the day. I'm up like 20% right here. Yo, it's 0 days to expiration. It's Friday. You get paid for the contract. I'm just like, man, this is nice. I took some profits. Right? I took some profits. I'm not haven't taken everything off, but I've taken some profits, which is, I like to call that one simple concept is called, might need to write this down, negative risk management. So negative risk management means if you have, let's say, 50 contracts or 10 contracts, right? Or 50 contracts in this case. If I have 50 contracts, I have taken 25 off. The remainder of 25, like this 25 came off at 20% gains, right? As I said, the remainder of 25 goes at break even. So if my entry, let's say, was $1, that means $100 an option contract, and I took this gains at 20%, that means 120. My break-even point is this 100. I don't want to lose money on my runners. I want to walk away with my gains. You see what I'm saying? It's called negative risk management. So I was like, sweet, my stop loss is break-even on these option contracts anyway. I haven't got nothing to lose here. Like, what's there for you to lose? Nothing. You can hold your runners for longer duration up until the structure breaks, which I'll break down as we go along. right? So I held this trade. I was like, sweet, there's no reason to sell. And this is how it goes. It kept going down. And this, again, this flag thing happened. I'm like, oh my God, this looks super cute. Hey, it looks super nice. Look at this. Making a beautiful flag around this critical level of 523. I'm like, man, this looks really, really good. And this price started going down. This looks really clean, right? Now, 10 o'clock hit. What did I say before? The moment 10 o'clock hits, I jump on a 5-minute chart. So I have to go on a 5-minute chart here. You see what I'm saying? So when I go on a 5-minute chart, I see this. There is a 200 moving average sitting right there, but I wasn't trading on a 5-minute chart, so I didn't know. Price tried to break below this and closed kind of below. So I'm like, okay, sweet. My stop loss is still break even. Whatever happens, even if it bounces, whatever happens, I'm still happy. You see what I'm saying? Now, price did this, made a little, kind of, I would call it, like I like to call these, like it's a little confused right now. The buyers are like, oh, let's take over. But the sellers are like, no. Buyers are like, okay, sweet. Because the sellers are in control. Buyers are like, sweet. All right, whatever. And this is what the price went. Boom. I'm still in the trade. And the concept here is very, very simple. And you understand this, you will understand how to let your runners run. Okay, there's a thing called this. Lower highs. How does the trend works? So trend works like this. Oh, hang on. Trend works like this. All right. So it simply goes, we have a high here. Then the price makes lower high. Then it makes lower high. And then it makes lower high again. Like this is how the trend goes, right? And this is lows. This is lower lows, lower lows, lower lows. And I'm sure you have heard this. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. That's how the trend moves. And when does the structure actually breaks? The structure breaks when we break above, when this lower high, it cannot be another lower high. So if it made another lower high, then that's still a downtrend. But when we break above the previous lower high, now that's not a lower high anymore, is it? This is the previous highs. Now this is higher highs. This is higher than the previous high. So now the trend breaks, the structure breaks. All right, so I was waiting for that. I'm like, I'll let my runners run. I have no reason to sell. I'll let my runners run. Before, why sell? So this is the highs, this is the lower highs. And I'm like, sweet, let me run. Price is coming down. I'm happy. Like, no reason to sell. You see what I'm saying? Now, guess what? What happened here? I caught a move from this VWAP point, 524, and price is at 521. This is how you let your runners run. Negative risk management is the point here that I want you to freaking grasp. Negative risk management. You take some portion off, you pay yourself, the remainder of the portion, you let it run with a break-even stop loss, thinking there's no risk, nothing to lose. The only risk here is you walking away early, thinking to yourself, nobody goes, I hate it. I hate when people say nobody goes broke taking profits. Bro, nobody gets rich taking small profits. You gotta let your runners run. That's how you get rich. All right. Anyway, so this is the price is making lower highs, and now let's see. Now there's a pullback. What happened? There's a little pullback, and this becomes a new lower. Exactly. You're right. A new lower high. Why? There's a pullback. Boom, 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 and the trend continues. I'm still chilling there. Now, what if this would have bounced towards this point? If this would have bounced towards this point, the moment it hits my break-even. Now, this break-even could have been hit here. But if it broke this structure, I would be jumping out. All right. I would not wait for my break-even. If it breaks the structure previous this, I would jump out if this kept going up. I would not wait for my break-even. All right. So just so we are clear. Now, I'm like, sweet, there's so much volume. I'm going to stay in this trade. And then we had a little pullback again. Sweet. And this is when I'm like, okay, still no problem. If the price broke above, like if this pullback kept going and broke above this particular point, I'll jump out. Why not? Right? But it went down again. Like, okay, sweet. So now this is the point that I'm watching. This is the point for my stop loss. Does it make sense to you? Like lower highs, lower lows. Right. Now where's my stop loss? Now this is my stop loss. I'm like, if this breaks, I'm jump out. Before my stop loss was right here. Now my stop loss is here. Every time we are making a different color candle, my stop loss is coming down and down. So I'm not letting my I'm not gonna get out at the break even, but I'm just like letting the lower lows and lower highs, this trend structure that I broke. This is how the stocks move. Either this or either this. This is how the stocks move. Oh man, this autocorrect fucking thing. But you got the point. All right, now everything's nice, sweet. Boom. What happened? My stop loss got triggered. So the contracts that I had, what happened? I jumped out. At what percentage? Like 200% or 180% something, right? Insane. Think about it for a minute. So 180%, you know what that means? 180%? I think, let me break it down. 180%, 180% means, let's say if your position size was $1,000, or let's say $1,000, right? 100% would mean you made your 1,000, like you turned into a $2,000 position, like trade. So 1,000 became 2,000. You doubled your money. But 150, 160, whatever you want to like make it easy. 150% would mean you turned your $1,000 into $2,500. So you profited $1,500 from your $1,000 position size with options. This is the magic of options, right? And what happened? Made a huge freaking move. I'm happy, right? And again, I'm not like, look at this. All right, this is the chat room that we have. Like KCU, best day ever, 7,000, $170, 300, 163, $1,000, 500, 750, 200%, $44,000. And I was like, 44K gains. I made no money compared to you. I was feeling like a big shot. And he's like this. Thanks to you guys and KCU, almost done with the modules. Thanks for the confidence to execute. $160, $1,200. Like we're printing. At this say $3,600, $238, $5,000, biggest day. 144, 5,000, 719, $43, 133, 468, 606. Like this is all today. Like I mean, you sleeping on me. This is what's happening. You see what I'm saying? Like you sleeping on me. $3,700. This is when the trading day started, right? Now you can learn. Check the first description. All right, I'm not gonna talk more about this. Check the link in the description box. The first link, if you want to learn my strategies and stuff, all the stuff. All right. Anyway, now let's break down the QQQ trade. All right. Now QQQ trade was kind of similar, but the concept here is different. All right. The concept here that I want to break down is called. Let's change the color of the pen. Dynamite. I'll break it down for you. All right. Dynamite level break. Now, what is dynamite level break? There's one concept, dynamite level break. Second is dynamite second break. This is the concept that I want to break down for you. All right. Very important. If you understood this, your life gonna never be the same again. All right. So, what is dynamite levels? Dynamite levels are every $50 levels on the stocks. Every $50 mark. Every 50. Every 50. Every 50. All right. So on QQQs, it would be 400, 450. 500, 550, 600, every $50 marks. All right. The dynamite second break, you need to understand this very closely now. All right. Dynamite second break is when there's a level sitting like 450, like a dynamite level sitting there. All right. I want you to really, really grasp this. This is freaking important. When there's a huge level sitting like 450, what happens is the people who trade stocks, no options, stocks, they are suckers for risk management. Like what I mean by that is they want to get 10,000 shares because they have unlimited amount of money at this stage, right? They want to trade 10,000 shares, 20,000 shares, 100,000 shares at around these levels. So they want to go long. They want to go long around these levels. So the first time when we break, they're like, okay, sweet, it reclaimed. Let me go long with my stop loss, either just below 450 or just below low of the day. They go long. But when the price reverses, because they're thinking, okay, you know what they're thinking? They're thinking, okay, only risk is this much. The reward can go to 460 in next couple of days or whatever. They're thinking, oh my God, this is like beautiful risk to reward. But what happens is when the stock prices start going lower again, hits their stop loss. Now they were long in the contract. Think about this. They were long. When you're long, what do? You buy first. But when you need to close your position, like when you buy an iPhone and you need to get rid of the iPhone, what do? You sell. So now they need to sell these shares that they got to just get out as a stop loss. As I said, they're suckers for risk management. They are going to get out because the order is already in the system, right? So the moment this hits, this becomes a sell order. It comes into the market. What happens? Prices now, it's just not 10,000. There's like about 1 million people who are selling 10,000. You get the point, right? Price goes like there's so much selling pressure starts all of a sudden. And some people have stop loss right below 450. Some people have stop loss low of the day. The moment this all breaks, prices just go nuts. Bam! It just goes down super fast. And this concept is called this concept is very, very important. This concept is called dynamite second breaks. Alright. So essentially, I'll break it down really quick again. Essentially, when there's a big level, the first time it bounces, so never go short the first time. Let it bounce. The second time when it's about to break, this is like when it's breaking, that's when I want you to jump in. Oh, that's when I jump in. I don't want you to do nothing. This is just like for entertainment purposes only, right? That's when I jump in. And the price, boom. All right, this is like entertainment, yo. This is what are you talking about? I don't know. This is like Mr. Bean episodes. You get the point, right? But then the price can go down like this. Because why? So many stop losses are getting triggered. So many stop losses are getting triggered. So many sell orders are coming into the market. Pressure, full pressure increasing. Everybody's like, oh my God, this looks so nice. Let's short. Boom, bang, everything goes down. That concept is called dynamite second break. All right, you understood this? This is just one of the concepts out of hundreds that I know. Or maybe hundreds too much, maybe tens of that I know. All right, now what happened here? 450 is the level right here. What happened the first time we tried to break? What happened? You're right. It bounced. Where are people's stop losses now? Their stop losses are like, let's say, all right, a little bit below this or low of the day. These are their stop losses. But where am I shorting this? I told you this video is going to be good. I told you I'm going to give you some sauce. I'm going to go short the moment this 450 breaks toward the downside. Alright, that's what I want to go short. But where would I put the stop loss? Now, stop loss is a little bit trickier with these ones, right? Not very tricky, a little bit tricky. The stop loss usually, what I like to do is I like to risk, like, let's say, not too much. I like to risk like 50 cents. So basically, my stop loss would go here 450.5. Alright, roughly, let's say, for example, right? But this is roughly what I normally do. Like, I'll give it like 50 cent room just in case, whatever. And now this is my stop loss. My profit target. Like, I know if this goes, this is going to make a big move. Price tried to break. And they are like, no. Now these sell. Bro, you know what I'm thinking right now? I'm like, oh my God. Okay, I haven't hit my stop loss. But you know what? This just happened to be a one bounce. It broke. Second bounce. This is what happened. Now there's a few people who are long here. Like people who went long once, then the people who went long again. Now, when it goes, just all this times 2. All this times 2. You see what I'm saying? I'm like, oh my goodness. If this goes, I'm like, if this low goes, oh my God. Times 2. Selling pressure times 2. The volume's going to pick up times 2. Market's going to go down times 2. What happened? Look at the volume, yo. Oh my God, man. Oh my God. Picked up. I told you. I was like, man, and it dumped. Everybody in my chat's like, oh my God. And I'm breaking it down for you. I'm not just saying, oh, it broke, retested, and I short it. No. There's a concept behind everything that I do. There's a structure behind everything that I do. There's a system behind everything that I do. I'm competing with the smartest individuals on the planet. The people who are trading on the Wall Street, bro, they're the smartest people on the planet. I'm competing with them. I want to make sure my systems, the stuff that I know, the glitches, the things that I know, the hacks that I know are so freaking good that I make money more times, like 90 times, and I lose 10 times. Of course, there are going to always be some losers. But the concepts just work, right? And I didn't sell here. I sold exactly what I was breaking down on SPY. I sold when the structure broke, and the structure didn't break. Like we're still sitting in the trade. The structure didn't break. The structure broke here. This is where the structure broke, and we got out. Now this move was, check this out, 450 down to all the way this, where we got out. 250% trade. Insane, right? 250. You know what 250% means? 250% for anyone who's beginner, $1,000 position size, a double would be 100%. You do the math. What's the returns here? So our contracts were 88 cents each, $88 each. Every single contract went, let me check my broker. Every single contract went to $3. So we made $212 on every $88 we spent. So you do the maths. It was not this, but times 2.5 pretty much. So you made $2,500 profit from a $1,000 account. I mean, hey, system works. You see what I'm saying? Now, let me know in the comments down below if this was helpful. And if you want to learn more, you can, there'll be a link right above me. But let me know in the comments down below if this was helpful. Subscribe to the channel will be amazing, because I'm breaking down all this stuff for you guys. I freaking love it. So give me some feedback in the comments, and I'll see you soon. Peace. I hope you learned something, and thank you for watching. Let's fucking go.